go ahead and jump in now. So I'm going to share my Harmonic scanner. Here we go. And let me go ahead and open the chat here real fast. And look at this. We got one guy. He's doing door-to-door sales right now, and he's on this call. That's just awesome. That's commitment. All right, guys. Let's jump in and let's go over what we're doing, okay? So last week, I'm going to actually pull up our trades right here and show you what we went over and kind of give you some insight of why we took a few trades and what trades we were going to look at for next week. And then, of course, we'll do a very quick strategy training, all right? And right now it's 8:19. So what we'll do is we'll send this call out and maybe we'll put a timestamp of when the actual trading starts, even though maybe we shouldn't. I'd rather people understand the mindset stuff as well. But okay, and we're actually going to keep this trade up that's right here and go over something real quick because we've got right here what could be a decent setup. Okay. Excellent. So last week, our first two losses, I believe that I had on there that it was like a 35 pip stop loss, but they were actually, I miscalculated it. One of them was only 20 pips and one was 25 pips, which is actually good because they continued to go in the direction that we did not want them. So, but we came out of the gates hot. The very next day, I think it was 3 signals, all 3 of them won. Got a vast number of text messages from everybody saying how grateful they were for those trades. And then the rest of the week, we smashed it. Now these trades, when they got to about 30 pips, and I believe AUD-NZD got to 20 pips, I closed all those trades out. And what we'll do from now on is let you guys know when we close the trades. Not always will they go to the take profit, but we did have a suggestion of maybe putting a 20 pip take profit and everybody just goes for the 20 pips. I personally, you guys can let me know your thoughts on that, but I personally think it would be better if we still keep the take profits long around the 40 to 50 pip range where we usually do. And just if we close them, we let you know. Reason being is on some trades, if you can win 2, 3, or even 4 times as much as the stop loss is, that one win can counteract 4 losses. So we'll look to see what's going to be best for you guys. Okay. Anyways, let's pull this up here. Trail stop coaching, we could do that as well. What I'll do is this next week, we'll just make some call outs when we're going to be moving stop losses and such. All right, so let's go over the strategy here. And what I'm going to do, instead of jumping back and forth between the whiteboard like I usually do, I know that some of you have been on this before and you've seen the strategy, but there are a lot of people that would like to understand it better. So we're going to go through it real quick. And this is exactly what I did this entire week to find these trade setups. This is all I did. And we simply used a harmonic scanner, found a good trade setup, waited for our confirmations, and then pulled the trigger. And as you can see, we won 78% of our trades. So the first thing that you're going to do on the left here, we see our brokers. The one that I specifically like to use is the one that says Trader's Way. Now the broker that I use on my MetaTrader 4 is Hugo's Way. But I feel like MetaTrader or JAFX, which I actually am not going to use JAFX, I prefer to just sit with Trader's Way. It's just the closest to Hugo's Way that I've noticed, and that's why I use it. Okay, but they all do give around the same scan. The only difference is simply spreads and a few other things. Not that big of a deal. So once you pull up the harmonic scanner, it's going to auto-populate with a current scan. And this one that we can see here on the 15-minute chart actually looks like a very good trade setup. In fact, it looks like an excellent setup. But now, what we need to remember is we typically will trade, if you open this up here, we typically will trade hourly, the 4-hourly, and the daily chart. That's usually the time frame that we're going to trade. Okay, if you're new, I would stick with the hourly chart, the 1 hour chart. It's just very simple to read, and it has very simple movements, and usually price will move between 20 and 50 pips on that chart, okay? So once we pull up in the Harmonic scanner, here's what I do. Every night at, let me do Eastern time, so midnight Eastern, so 12 o'clock midnight Eastern. So for those of you in England area, I believe that would be 5 a.m., I believe. For those of you who are in Portugal, I'm not exactly certain, you'd have to see, but look up on Google, 10 o'clock p.m. Eastern Standard Time. What time zone is that for you? That is when I pull up the Harmonic scanner, okay? And my goal is before 11 o'clock, so within that hour, my goal is to place these trades. So typically between 10 and, midnight and 1 o'clock, I was going to Mountain Standard Time. So midnight and 1 o'clock a.m. every day, Eastern Time, that's when you can expect for me to send these trades out, okay? And here's all I do. When I sit down, I open my laptop, I open the Harmonic scanner, I come over to Trader's Way, and I click on the hour, 4 hour, and daily timeframes. And here we have some patterns that we use. I'm going to list for you guys what patterns does this strategy work best with. Shark is number one. I've had phenomenal success with the Shark. Even though it has 2 entries, I'm going to show you how to work that, okay? Number 2 is the Gartley, and number 3 is the crab pattern. These are the 3 patterns that you're most of the time going to use. Now, there's a pattern called butterfly and deep crab and a few other things which sometimes have a little bit different way of looking at them. But for now, all of the trades that we took this last week were only these 3 patterns, and look at the results that we got. If we got good results with these 3 patterns, why do we need to try anything else? It's not often necessary, okay? So I want you guys to write that down. Shark, Gartley, and crab. So if you don't know anything about trading yet, you have no idea what any of this means, we're making this so easy that you can understand by simply opening this, clicking on H1, H4, or D1. You can simply see these pattern names. If it's one of these 3, you can use it. If it's not, stay away from it. Is that very simple? Let me read you guys' comments real quick. Oh, sorry. Yeah, bat pattern. That's right. I actually used crab patterns this week. We used a crab pattern on 3 trades, actually, and it worked out well. But let's, yeah, I apologize. Let's do that. And bat. So essentially the ones that you will go, and let me make this even clearer. Let's do yes to these and no to these. Okay. There we go. Thank you guys for catching that. Yeah, this week we actually took 3 crab patterns, which they turned out great. They were awesome. Crab, the reason that a regular crab would work is because it has not overextended through any sort of support or resistance, whereas a deep crab, we're often seeing a major overextension, but sometimes those just continue with the trend. So we're looking strictly for trend reversals. That's what we're looking for. And as you can see here, that's what this is on a lower time frame. We're looking for this trend to reverse. I'm going to show you exactly how we're going to do that, okay? Perfect. We'll leave that right there. Take a note, take a screenshot. Those are the patterns that you're going to start to use, okay? So once we have that down and you open this up, for those of you who have never used a Harmonic scanner, it's real easy. These patterns here at the top are the most recent. The ones at the bottom are the oldest, okay? That could be a few days to even a few weeks old, sometimes even a few months old. but some of them are still valid. So it's always good to go through and look through the patterns and see where is price in relation to the entry point. Has price already hit a stop loss or a take profit? Okay, or has it been consolidating for 2 weeks on end? All right. For this right here, let's just for training purposes, let's say that we just pulled this pattern up. I know that it does say that this is the 1 hour chart. Sorry, we've got my wife mowing the lawn outside, so you might hear some noise. But let's say that right here, we've got this is the 1 hour chart. Even though it is the 15, I just want to teach you the strategy because this is a good setup, okay? So here's how this is going to work. It's real simple. Step one, some of you are already going to get ahead of me here, okay? Step one, once we find a pattern where the price is still near the entry point or has not hit a stop loss or take profit, we're going to look for something called divergence. Now, being new at this, listen, this is a step-by-step thing that you can write down on a Post-it note and put it on your monitor. And literally just go through step by step as if it's a checklist. If you check each step off, you can place a trade. Okay? When you check off number 1, you can go to number 2. When you check off number 2, go to number 3. If number 3 you check off, you can place the trade. Okay? All right. Yes, Tom, harmonic scanner? Absolutely, for all the signals. Okay, so divergence. A lot of you in here now, you know what divergence is. Divergence is when the price up at the top, on this top chart, the actual price chart is moving in a different direction, the trend direction, not the actual price direction, but the trend direction versus the trend direction down here of the RSI, which is an indicator. So when price trend direction is moving opposite or towards the indicator direction down here, the RSI, we have divergence. That's what we're looking for. And we're looking at a larger scale of divergence. We're not just looking at this last portion of divergence. We're looking at a larger scale. And I'm going to show you how to do that. Okay? How do we find divergence? It's very simple. And in fact, I think this week I'm going to teach you how to do that. I'm actually going to write it down so you can notate this, okay? How to find divergence. Step 1 is connect the X and the D point on the harmonic pattern. 2 is determine if the line between X and D is going up or down. Okay? So there's already a line here, right? Between X and D. Let me just make sure that you guys can write that down first. How to find that divergence. This is the first step. Connect the X and D point on the harmonic scan. So look at this. Between X and D, we can see there's already a line there. So we don't have to draw it in. Determine if the line between X and D is going up or down. So I'm going to let you guys do the determination. Is it going up or is it going down? Let's see what you guys say in the chat. Is that line going up or down? Greg, first one to it. Angelo Martins, perfect. It's going down. Exactly. Okay, is that easy enough? You just did the first half of finding divergence. That's it. Now the second half is we are going to align your cursor with the X or D point below. Let's just say X to make this easy, with the X point on the RSI and connect it to the D point on the RSI using a trend line. Okay, let me make sure we can all see this. Align your cursor with the X point on the RSI and connect it to the D point on the RSI using a trend line. Well, how do we do that? Let me show you. Okay, I'm going to give you 20 more seconds to write this down. Align your cursor with the X point on the RSI and connect it to the D point on the RSI. Okay, come over here. Here we go. Here's our pattern. Between X and D, it's going down. Now what we're going to do is align our cursor using the trend line tool. Down here on the RSI, you can see this dotted line, and align it with the RSI, and then connect it. So we'll click and connect this with the D point. There we go. Let's make this thicker so we can see it. Okay. That's all you do. So we're taking our trend line and we're lining up here on X. We're coming over to this high point at D, which was this red candle right here. Okay. Now, even though we see D connecting to this, it's okay. We're going for this high point, this red candle, to check the overall divergence on here. As you can see, look at this. If we extend this, this is a mini trend right here on the RSI. Okay, you can see how it lines up with each other perfectly. On the RSI, like, look at this. You can find trends on the RSI. Okay, they're everywhere. Okay, does everybody get how to do that? This is actually going up just a little bit more. There we go. Everybody understand how we just did that? Very simple, right? We're just aligning our cursor with X and D on the RSI. Now look at this line. Is it moving up or down? It's moving up. Just barely. It's just barely moving up. Right, it's almost flat, but guess what? If we were to take this thing microscopically, can you see these little dotted lines here that are perfectly straight? They start on top of this line, they end on the bottom, which is showing it's slightly slanting up. Although it's a slight divergence, that is still considered divergence. Because here's what you're going to notice. Up here, price on a larger scale is in a downtrend. Okay, that's a downtrend. And what we see on the RSI right here, right there, is it is above the overbought point, which is above this 70 line. Okay, for those of you that have never used RSI, RSI is just showing the price, the average price movement over a 14-day period. Right here, this shows above 70 that we are overbought on the price, which means if it's overbought, it's too high for where it has been in the last 14 days. So you'll look down here, see where it's down at 30, that's considered oversold. It's too low for where it's been in the past 14 days, and most likely, on average, it's going to go up. You can see, I'll just draw with this brush. Notice when it hits up here, look at this, we get a double top right here. Where does price go? Goes down. Okay. Look at when it gets to right here at the 30 point, where does it go? It goes up. Overbought, oversold, very simple. Okay. So if we've got price up here at a downtrend, and on the RSI, we've got divergence, it's showing that it's overbought, where is price most likely going to go? It's going to go down. And look at this. Our take profits are in this direction, the down direction. So that, my friends, is a good trade. Those of you who are a little bit more advanced, you might notice one other thing: support and resistance. We have right here at this entry point, let me drop pretty thick. That's a good resistance level. Notice how price bounced off of it. Then it breaks through and retests. Then it comes back up and tests it again. That's most likely going to go down. Just pure market structure, that's what we're looking for. Is that clear? Now that's only using divergence. Okay, that's only using divergence. In reality, you can actually get away with just doing that on this strategy. And that's it. When you see price near the entry point, which is either a support or a resistance zone, just place a buy or a sell and you're good to go. But now I've got another way to help get just an extra confirmation. And I'm going to show you that right now. Let's open up a new pattern here. Let's open up, I think this is the one we were just looking at. So let's pull up something else. Let's look at Euro New Zealand dollar. Okay. Excellent. This is divergence. I can see it already without even having to do it. Okay. So let's rewrite our steps here. We're just going to go through so I can show you the next two steps that I like to use when I place trades. Okay, so divergence. And we'll find divergence together right now. So first step in finding divergence is we're going to see, is the line between X and D going up or down? We can clearly see it is going down. Okay. Step two, grab your trend line. Align your cursor with X, which is this blue candle. It aligned, let's just say it's right here, because honestly, it doesn't matter on this one. The divergence is pronounced. And connect it. Whoops, that's not my trend line. Here we go. Align with X. And connect with D. Just like that. That line is going up. Now, do you remember what I said? If they are going towards each other or away from each other, we have divergence. We are looking for this. We are either looking for this between the price and the RSI, or we are looking for this between the price and the RSI. That's it. That's divergence. Okay? We are not looking for this. That's something different, which we can teach another time. Okay? But let me draw a red. We are not looking for this. Okay? We don't want that. We just want either away or towards each other. Okay? Exactly, Luis Santos. That's exactly what it is. Okay? David, the more pronounced divergence, the more solid trade or larger movement, it doesn't matter. Because in reality, on the actual charts, like you go to different time frames, you'll get more pronounced, you'll get less pronounced. It's not going to matter too much. Exactly, and yeah, Luis Santos, that's called convergence. That's more for a trend continuation. We'll focus on that another day. That's what you sometimes want to use with butterfly patterns. But anyways, so can we all clearly agree that on this trade that we're looking at, Euro New Zealand dollar, we have divergence? We just completed step one of our strategy. Okay? Step two, what do I do next? It's very simple. Those of you that use the bounce back, you're going to love this. Step two, draw a trend line. Now, where do we draw the trend line? This is not the overall trend. This is just the current price trend. So you can even do exactly what you do on bounce back and drop down 2 time frames. To make it easy, you can even jump over to, what pair was this? This was EURNZD. Let's jump over to it on TradingView. For those of you that are new, it's called tradingview.com. Okay, Euro New Zealand dollar. Here we are, 15 minutes, 15-minute chart. Okay, so we're dropping down 2 time frames just to the 15-minute chart. Grab your trend line, just like this, drop from the low point to the high point, just like that. This trade might already be good to go. It's looking good. You're going to draw a trend line just like that. So let's jump back here and just show you. Draw a trend line from this low point. Oh, there we go. That's actually a little bit. Looks like this one maybe just didn't update compared to where TradingView's at. Let's check the actual candles. Oh, okay. It's about the same. This one probably when the market closed simply just didn't update, whereas TradingView is a little bit more accurate. So we got that candle closed through. But anyways, that's it. That's your step 2. We're going to take where the current market price is and draw a trend line just like that. See, we're connecting from this bottom point to this candle, continue up. Just like that. If you don't know how to draw a trend line, your trend line training is in the IML Academy. And it's very, very easy. All you need to do is practice it multiple times. What I suggest is if you don't know how to draw a trend line, jump on a TradingView and grab the trend tool and just start drawing lines where you see these high points connect. That's a trend line. Just practice. Go through and just practice, practice, practice. Draw your trend lines, okay? Until you become good at it. When you're good at drawing a trend line, it's going to make life easy because you'll use the trend line for so many trades, and it'll work wonders. You can honestly trade just with trend lines, okay? Curtis, if you love bounce back, you're going to love this. Yeah, so start doing this on the 1 hour chart, okay? Just like I did over here. Just like I did right here, I drew that trend line, okay? Just like that. That's step 2. We drew our trend line. Now step 3. Curtis, you're probably going to know this. Step 3, wait for price to break the trend. So for those of you that don't know, a trend line acts as an imaginary wall. Price has a hard time getting through that wall, okay? If, for example, let's come up here. You can see right here how price, it's tapping on this wall. That's not the right way. I had it facing down. I think I did. There we go. See how price, it's tapping. That's also not the right way. See how price, though, you get the gist of what I'm trying to show you. It keeps touching this imaginary wall right here, and it's going in an upward motion. It can't break through it. It's having a very difficult time breaking through it. Believe it or not, a trend line is actually a form of a support or resistance line, okay? But those of you that are new, pay attention to this, okay? You see that? It's like an imaginary wall. But what happens is we get to a point where price will finally break right through that wall and make a solid, strong move. As you can see right here with this breakout of that trend. So when you guys hear the term breakout, that's what we're talking about. We're talking about the price breaking through a trend line or a support or a resistance line. I'm going to delete these real quick. I wish that there was a faster way to do this. Maybe there is, but I don't want too much clutter on the screen. Okay? So once you draw your trend line, we're going to simply wait for price to break out of that trend line. That's all we want. When price breaks out of the trend line, you've got two choices. Either A, you can buy or sell right there, depending on the direction we're looking for, or you can wait for what's called a retest. I personally, I wait for a retest. Or enter on retest. Those are your 4 steps. So number 1, we're going to find divergence. Between X and D, this line is going down. On the RSI, this line is going up. We have divergence. So let's go to step 2, draw a trend line. Okay, let's do it again so you can watch me do it. Grab our trend line tool. There's our trend line. Just like that. That's step 2. Step 3, wait for price to break the trend. What we want to see, everybody, is a full candle on the 1 hour time frame, not the 15-minute time frame, the 1 hour time frame. To know that this is a price break, we want to see a candle body. Okay, so a candle body is this part right here. This big part of the candle is the body. Okay, not the wick. The wick is the little, like an actual candle, okay? We don't want to see the wick. We want to see the body close below this trend line. So let me draw an example. And we're going to pretend that this red candle right here closes below the trend line. That right there is a trend break. Price finally got through that wall, which is step 3. Let's bring this over to where we are so we can look at it all at the same time. Okay? Price to break the trend. And then what we're going to do is enter on a retest. Let me give you a real life example of what we're looking for. Okay, that already right there hit take profit 1. That's fine. I'm going to do this as if it's the actual price so you can see what's going on. I can actually just leave this black. Okay, let's say that we've got a blue candle here, got a blue candle here, and then a blue candle here. There we go. That's called a retest. A retest simply means the price is now testing whether or not it can break back through the trend on the opposite side of the wall. Your entry point, ladies and gentlemen, is right here. Let me move this out. That right there is your entry. And all we want to see, now that we've confirmed our 4 steps, is price go to our take profits. Okay? That's all. Now, oftentimes, here's what you'll see. This blue candle right here, what could actually happen is it may not always touch the trend line, but it will align the retest. It will align the retest with where the previous support and resistance level was. Okay, which would be right here, where I just drew that blue line. And then you enter and ride the trade down. And that, my friends, that is the moneymaker. As you can see, we're confirming some solid things here. With divergence, we're confirming trend, overbought, oversold. We are drawing a trend line. We're waiting and being patient like a sniper or like a hunter, waiting for the kill until price breaks through that trend line. And then, don't get trigger happy yet. Right here, the line is still standing on these two candles. We're waiting for the retest when the lion lays down. And then you know you've got a for sure kill. If you're vegetarian, I'm sorry. We don't kill and eat lions anyways. I'm just giving an example. But look, wait for the retest and then enter. Now, some of you might be wondering, and I'm actually going to go through the chat right now. Okay, perfect. Luis Santos. Good question, brother. No retest, no entry. That's correct. For me, no retest, I don't enter. What happens if price just does this? And it goes all the way to take profit 2, and then all the way to take profit 3. Guess what? On to the next trade. There's another opportunity coming. Okay? The reason that I'm teaching you this, guys, the reason that I'm teaching you this is because it's patience and it's discipline. Okay? That's why. Does it have to hit the suggested entry point? Not always. That's why we watch for a break in the trend. All right, Rob? Because sometimes it may not get to this entry point, but it's already going to break the trend. We could catch that move with the trend break. Now, what happens if it does fake us out? That's why we have a stop loss right here. We'll have a stop loss, typically around 30 pips. And if it hits the stop loss, we can wait for a second entry and then catch a bigger move, okay? That's why we use stop losses in the game, okay? So, exactly, you protect your capital that way. Yep, love it, Chris. That's the next money train because they're always coming around. Can you use the same strategy when looking for buys? Absolutely, absolutely. When you see a buy, you're going to see this type of divergence, usually. Usually, you'll see a divergence like this. Okay? Does this make sense to everybody? Do you see how simple it is? Where literally all we're doing is looking for divergence. I just showed you how to find it. You draw a measly trend line. It's just a line. If you can draw from point A to point B, you can make money. Then be patient and wait until the price breaks through, okay? And then when the price comes up and retests that trend line, enter the trade. Now, what if this happens? This next candle comes up right here. Whoops, it's not going to let me draw it. This candle comes up right here, doesn't go all the way to this blue line where we had that resistance, but it's touching the trend line. Can you enter? The answer is yes, because your stop loss is still going to be way up here. That's your stop loss. Okay. So if it touches the trend line right here, you can enter right there as it retests on the actual trend line and then ride the trend down, okay? What take profits do we take? Here's why I love this. Look at, they're already given to you. Take profit 1, 2, and 3. You'll already know exactly where they are. What happened to the information? That was on another screen. We deleted that a while ago. How often are the scans? The scans are, it just completely depends on the market. There is never a how often, or we could have 2 trades per week. We could have 10 trades per week. We never know. Absolutely. Shelly Ann, we always record these and we'll make sure you get that. Okay. Yep. I do this at midnight Eastern Standard Time. That's when I look for my scans. Okay. Let me see real quick if on that other scan, I doubt that it is. If the notes are still there, I don't think that's how it works. Oh, maybe it is. Nope. Oh, yep. There we go. All right. Those of you that missed this, let's have you jot this down real fast, okay? Have you guys jot this down real quick. Yeah, so this week I took profit long before take profit 1 and 2. So actually what I did on these trades on the harmonic scans, they actually did pass take profit 1. What I did is I actually put down on some of them take profit 2 or take profit 3 on some of the trades. We were going for some longer moves. However, the profit was so great that I took the profit. It was over 35 pips. Usually at 30 pips, you break even or take partial profits anyways. But what we're going to do from now on, David, is we will actually, if a price does not hit a take profit, but we close it in profit, we will let you know. We'll tell you, for example, close AUD USD 35 pips profit, and then just take the profit, okay? After midnight, after I look at my scans, I determine which trades are good and which trades are not. If I see trades that are good, I'll place a trade. If I see a trade that's not good, I'll go on to the next one. But I usually have just an hour. It's actually only like 15 minutes. I'll just try to see if there are any scans and trades to place. If there are, I'll send out the signals. Okay, last question here. Do you want to retest on the trend or the support or resistance, depending on a buy or sell? Yes, exactly. One of those three. Okay. When you send trades, I could see them on the harmonic scanner also. Most of the time, yes. Unless I've got a trade that was a harmonic scan from the past that I'm still monitoring and the scan actually doesn't come up because it's expired, but I'm still monitoring that scan, then I'll be sending that out. So I'd say 80% of the time, Andre, yes. All right, you guys, keep in mind, share this with your teams. Share this with your teams and teach them mindset. You've got to teach people that trading is an 18-month gig. This is going to take a long time for people to get good at. Nobody comes out of the gate dunking a basketball, all right? Michael Jordan took years and years. He was cut from his high school basketball team. And he ended up being one of the greatest players of all time. Because of work and work and work. After all the failures, he succeeded. Stick to a strategy. Don't keep trying to find different things to do, all right? There is no reason why I do it at midnight. It's because it's before the London session, and that's before I go to bed. So I'll try to get them in before London. But you can literally, any time of the day, you can take them. So if you ever feel like you want to try to take a trade during the middle of the day, open up the scanner and see if there's something cooking. All right. Last question from Blanca. We always post the recordings in the Telegram, so you'll be able to get the recordings here. Anyways, everybody, have a good night with your families. Enjoy yourselves. Enjoy the weekend. Maybe spend a day, like tomorrow, spend maybe an hour just going over the charts, maybe understanding a little bit more, but use weekends to relax, to de-stress, and then come Monday, we'll jump back in, we'll start making money together. Okay? Please keep your mindset and your mentality strong. All right? Keep your mentality strong. And 3 years from now, everybody, I'm telling you, all 62 of you on this training, 3 years from now, we're going to look back and we're going to be very pleased with all the work that we put in together. Okay? I can't wait to see so many of you buy your dream houses or your dream cars or pay off all your debt. And we can all tell each other the stories of how we did this together. That's what we're doing. All right. Anyways, guys, Bitcoin is over 10K. And have a good night. Take care, everybody.